So just in case you didn't know, Tesla has announced that they are about to do a 5-for-1 stock split. Now, what's interesting is if you take a look at Tesla's value, Tesla, as you know, I've been in Tesla for a really long time. Tesla has been on the decline from about $1,700. But as from what I've seen of Tesla, now you got to understand, I've been in Tesla 8 years. I got in 2012. It was $30 a share, and I got out above $1,000 a share. Some of my family members bought in back in March when it was about $400 because I told them, I was like, listen, Tesla, all of these apps, all of this stuff, these stocks have fallen, they've crashed. This is your chance to buy in. Just like I've been telling people who actually listen to my channel. Because unlike people like Jim Cramer who actually lose money on most trades, I get completely ignored. But it's no big deal. It's no big deal because, hey, listen, I'm not handing out money to nobody. So if people don't want to listen, then that's okay. But the bottom line is, I tell whoever's listening about what I believe is happening. And Tesla, I was on a roller coaster with Tesla. I thought I was going to get out of Tesla back at $300, but I held on to it. And I knew once the Model 3 and the Model Y came that simply because they were cheaper cars and they were affordable, I knew that those were going to basically put Tesla on the map. Now we can see it, that even though they have shitty interiors, the Model 3 and the Model Y are affordable, they're spacious, they're attractive, they're unlike anything people have ever had before. And a lot of people are really depressed shoppers and they want something new. And I have to say, I'm very impressed with the Model 3. I'm very impressed with the Model Y. Personally, I couldn't probably go anything for myself smaller than the Model X or possibly the Cybertruck, but that's not out yet, so I can't even tell what that's going to be like. Bottom line is, Tesla, their stock has been a roller coaster. Their share value right now is $13.74, and that's right now because, as you can see, most of the market dipped today. The Dow is at 27,686, but most of the height has been shaved off a little bit, and that's not. I really doubt that's going to stay around for a long time. It's just that the economy is still in the motions of reopening. Apple was at 404. Whoa, shit! Apple is 459. Apple is 458. The last time I checked, it was 444. And as you know, Apple's getting ready for their stock split on August the 24th. So it felt to me like people were trying to drive up the prices as much as possible. But Apple is doing a 4-for-1 split. So that means that you take this value, 437, divided by 4, and that's how much the share is going to cost. But that also depends on when you buy in. Like if you had bought in when it was $400, then it would only cost you $100 a share. If you're buying in right now, it's going to cost you close to like $409, $411, something like that. So Apple got a little bit of its value shaved. Google got some of its value shaved. Everybody was down today, basically. That's why if you're looking at this, you see everything in red. Tesla is at $13.74. Now, I don't know if the values like Apple are going to start to slowly increase due to the fact that this announcement of the split is happening. Now, it says, okay, they're doing this on August 31st. So you've got Apple on August 24th. You've got Tesla on August 31st. I was predicting that sooner or later this would happen because one thing you got to understand, the reason why these splits happen is because these mega corporations who have trillions of dollars and are trying to control everything. I swear to God, we're going to end up just like RoboCop 2, where basically you think you have rights and free speech and then some corporate guy tells you, well, you can only do what we tell you to do because this is fascism now, but anybody can buy OCP stock. Like if you never saw those movies, you wouldn't understand what I'm talking about. I really recommend you go back and watch those movies because they predicted everything. They basically, they predicted the war against the police. And I've been waiting for this for a long time. I was already mentally prepared for it. I knew it was coming. But anyway, Tesla's doing this split on the 31st. I'm not sure how my family members who bought into Tesla feel that they bought in around $400. They are up to $1,300 or $1,400, and now they're seeing the splits, because people who own the stocks, they don't like to see the splits. It, in some cases, people say it waters down the share value. But I want you to think about it like this. A few years ago, 5 years ago, I made a video that said buy Apple stock because of the split. When it split, it was about $90-something a share, right? Right now, it's at $437 a share. So by them splitting their shares, it does, in some cases, if you got in early, it does kind of water down the stock. However, it allows more and more people to buy into the stock. So that means that more of those dividends, those juicy, delicious dividends, get paid out to more and more people. So that's just what it is. I also believe, and I think it's not too soon to make this prediction, but I believe that Google and possibly Amazon may have to end up doing a stock split themselves, because that if you're dealing with $3,000 per share, you already know that most people aren't buying full shares unless they're doing fractional investment. Nobody's buying $3,000 a share unless you're a multimillionaire and you just don't give a damn. There are other car manufacturers that I've told you about. For instance, Workhorse. Workhorse is making trucks, and they've got a truck coming out. And right now, if you look at their values over the last 6 months, Tesla dragged them up, but they're still relatively inexpensive at $15 a share. So don't think that Tesla is the only thing you can invest in. There's also Candy Technologies. Is some crazy, ugly-ass Chinese cars that they want to put these ugly-ass looking smart cars on our roads, so that when I finally get a Jeep Red-Eye, I can blow past these things at like 150 miles an hour. But anyway, they want to put these things on our streets at $13,000. But let's imagine that they don't really make it that well into America. Understand something. Cars like this, when you go to India, Tata Motors, they flooded the streets with those little Tatas. And if you go to smaller countries like Seychelles, or you go to these little island nations, most of these countries are going to end up in one way or another moving over to electric cars. Diesel is difficult to ship in to some extent. I'm not saying it can't be done. I'm just saying that most of these island nations would prefer electric grids because it's easier for them to deal with. A lot of these island nations, they do have, power failures all the time, but that's getting better slowly because of the solar power infrastructure that's being built in most of these places. But because of global warming, and because of most of the government mandates, Europe says that 2040, they expect like the majority of cars to be electric. It's coming. It's just coming. So this is another possibility. I believe you can get in at $867. My recommendation, if you have the money, drop $1,000 into it, get 100 shares, get 800. Wait, drop $1,000 and get 100 shares. That'll cost you $867, and just sit on it. You have to understand, there's a lot of racists out there. There's a president who's trying to start shit with China. China's not having it. I just bought a television today, 50 inches for $200. You can't stop China. That's the bottom line. The Chinese population is growing. China owns Southeast Asia. China owns Africa. China owns South America when it comes to technology and infrastructure. Just because some American president says, hey, we're going to ban WeChat, and we're going to ban TikTok, and we're not going to let you sell Huawei here. Well, let me explain it to you like this. You've got 350 million people in America, half of which don't really buy anything because they're either children or prisoners. All of these Chinese companies, they're not worried about American buyers. They're worried about Africa, South America, Southeast Asia, and Europe. So Trump can talk all shit he wants, but the simple fact is you can't start a trade war with a country that is making virtually 90% of your manufactured goods. It kind of doesn't work out that well. So anyway, not to belabor that point, there's also NIO. NIO is at $12.99. As you can see, over the last 3 months, Tesla a lot. See, what it is there's a lot of people who wanted to invest in Tesla, but they saw Tesla's too expensive. So what they did was they said, well, if Tesla can do this well, all these other car companies could do that well. I believe they call that the hot hand fantasy, where you think that just because something is doing well, it'll keep on happening. Well, maybe not. Maybe it is. Who knows? But bottom line is, you throw in $1,000, you can get yourself, or no, actually it's going to cost you a little bit more than that. But if you get yourself maybe about 100 shares of NIO, I see the problem is I don't know how much money you guys have and how much you can afford. Usually when I buy into anything, I like to try to get 100 shares if it's expensive. Or if it's cheap, I get 1,000 shares. And if it's really cheap, I get 10,000 shares. I like to keep my numbers divisible by 10. So this way I can do the mental math wherever I am. I don't need a calculator to do it. But that's just me. So you have NIO, Candy. That's ridiculous. But anyway, NIO, Candy, and Workhorse. General Electric is, General Electric is up from where I told you to buy into it. But General Electric right now, they're not really doing much because, General Electric makes airplane parts and stuff, just like Boeing. Right now, they're not really doing that much. As you can see, Bitcoin had its rally. It rallied up to 12,000 something dollars and it dropped. Gold is back up here. Gold is around, gold right here is a little below 2,000, but gold has been on a steady incline since the last 5 years. So gold is used. Basically, here's the thing. This is what you got to understand. Let me break it down because a lot of people like to hear me break stuff down. You're a rich person. You're not a rich person. I'm just talking about rich people in general. Rich people are scared. They knew that coronavirus was going to destroy whatever money that they had in the stock market. They knew it was going to evaporate. So what did they do? They pulled out of the stock market. That sent the Dow from close to 30,000 all the way back to what was that magic number? I think it was 18,000 if I'm not mistaken over the last 6 months. Yeah, the Dow was down to $18,591 on March 23rd. Over time, once these wealthy people felt the trust again, they were like, okay, you know what? I'm going to take my money and I'm going to put it into the stock market. Mind you, Forbes just did a study that showed actually a lot of these wealthy people have a lot of money in cash. They have a lot of cash reserve. A lot of their money they're not going to risk in the market right now, but they have a lot of money in cash. That cash sitting in bank accounts, it's earning them nothing. I told you back in March to buy bank stocks, Capital One, JP Morgan Chase, who else? Bank of America. All the banks that were paying dividends, right? The dividend payments alone that you're getting from the big banks or the big oil companies like Chevron, Shell, Exxon, BP, the dividend payments alone automatically supersede what you're getting from these banks that are pathetically charging you 0.05% interest. And at most, I watched Stephen Graham's channel. He was talking about most of these bank accounts that are giving you 1% interest. They even have a bank called Redneck Bank, believe it or not. They have a bank called Redneck Bank that's giving you 1% interest. Thing about it is these rich people, they're not trying to get no 1% or 0.05. They're like, no, the hell with that shit. So what they're trying to do is they're trying to buy the stock market so that they can make their money off of the dividends. And the dividends, let me tell you, I got more back in dividends from just my bank stocks than I got in interest in the bank. And I got tens of thousands of dollars sitting in the bank. I got more off the dividends than the interest. But it's obvious because the interest is only 1% at most. The dividend payment, the dividend yields are high. They're 5.8, 7, 6. Depends what you're buying. But oil and bank stocks are the one things that I've noticed have these solid dividend payments because for the most part, they're always profitable. Airlines at first, right now the airlines are down. I've noticed that a lot of investment strategies are saying stay away from the airlines. Okay, fine. Until we can fly again, it kind of makes sense to stay away from the airlines. However, if you were able to buy the airlines as cheaply as possible, it actually makes sense to buy the airlines. But problem is now you have to wait to see your money double. It's going to take time. America Airlines is still $13.73. JetBlue is up from $9 and something cents to $11.71. Delta is at 29. That's up from the last time I checked. It was 26. Boeing as a company is up. United Airlines is still in the red, but it's doing better than it was because it had dipped a little bit lower back in May to 1992. Bottom line is this. It's a lot of these companies are only down temporarily. You can invest in whatever you want to invest in, and you're just going to have to wait to see your money recoup. What most of you want is you want fast money. You want your money to recoup real quick. So the thing about it is some of these companies are good for it, like technology, where because, people are sitting at home working or they're doing distance learning from home. I told you at $50, I told you when it was slightly below $50 to buy AMD and Logitech. Right now, those are sitting at $76 and $71 a share. I told you to buy AMD and Logitech. I told you 3 months ago. Hopefully, some of you did. So here we go. Tesla stock split, Apple stock split on the horizon. It's coming up. So here I am thinking, you know what? I'm got my money ready. I'm going to buy the iPhone 12 and I want to get an Apple Watch 6. And I'm thinking, part of myself in the back of my mind is like, hey, you know what? If you took that $2,000 that you're going to spend on this new phone and new watch, you could just buy more Apple stock. And it's a hard balancing act between the things you want and the stocks you want. But ultimately, the returns are really coming from the stock. Because Apple, I think most investors know at this point, Apple's kicking ass. Nobody can make a product like Apple makes it. Because even if you make one of those crappy Samsungs or one of those boring LG models, or one of those garbage Galaxy S20s or 35s or 42s or whatever, it'll never run iOS. iOS is a monopoly. As far as I'm concerned, iOS is a monopoly as much as Microsoft Windows 10 is a monopoly. Nobody else can run iOS. And iOS makes iPhone, and iPhone makes iOS. That, in my opinion, is a monopoly. These investors, I think, understand that. So when they're buying their Apple stock, they're like, okay, yeah, I can put my money into Apple. Apple's safe. What I think most people, the panic back, because, you got this horrible president who's about to be replaced by Joe Biden and Kamala Harris. This idiot mismanaged this entire thing so badly and sent poor signaling to the country and to Wall Street and to the rest of the world. But the bottom line is, the panic caused people to pull all their money out. But now they see all of these tech companies making these gains, Netflix, Zoom. They see everybody making these gains. And they see people walking around bragging about how much money they're making off of these things. So the rich dummies are trying to put their money back in, and they're trying to do it in a way where they can pretty much guarantee that they'll take no loss. Apple, we already know what Apple is. We know Apple is going to make some damn eyeglasses, and people are going to run out and buy them. People never wore glasses before, going to want to go out and buy some damn eyeglasses. People, I thought those headphones they made, the earbuds, the earpods, I thought those things were so stupid. First of all, I've always had a problem fitting those things in my ear. And I was like, you know what? If people buy these things, they're going to lose one. And everybody said the same thing. But now you fast forward. Everybody ripped off Apple's idea. Everybody, Samsung, they got the Galaxy Buds. Everybody has a little case. Everybody's got their Apple rip-off, knockoff. Samsung's got theirs. All these other companies I can't think to name because they're not worth naming have their own copy of these buds. But there's only one Apple Bud. And there's only one ceramic white Apple case. But everybody's trying to copy. So I think we understand the reason why Apple's kicking ass. Apple's kicking ass because nobody else is Apple. Nobody can do what Apple does. They got the Apple, what is it called? Apple Silicon. They got new chips coming. They're going to make their own chips so these people stop talking all that smack. Oh, yeah, Apple uses parts from Samsung and Apple borrows parts. Well, guess what? Now they're making their own stuff. So you allowed them time enough to get so strong that they basically... How much is Apple worth? How much is Apple worth? Apple's worth $1.8 trillion. $1.9 trillion if you round up from 1.8. They're going to be worth $2 trillion very soon. After they do this stock split, they'll probably go up to about... Who knows? They could make another $1 trillion. I would prefer, I'd damn near let Apple run this country, because at least if Apple was running the country, shit, this $30 trillion worth of debt that we'll be in by the time Trump is gone, if Apple was running the country, shit, we'd be making money hand over fist. In fact, I tell you, I don't think they could do any wrong. I really don't. I mean, how do I argue with a $2 trillion company? I can't. Not when America's bankrupt and sending out welfare checks. And most of these people are they're waiting anxiously. I mean, there's some people who are waiting, they're facing eviction, they're facing foreclosure. But then there's other people who are just going to get those checks and they're going to take them, they're going to buy Apple products. Some of them are going to buy stock. Some of them are going to buy Tesla stock. They're going to wait for the split and they're going to buy Tesla split stock. So my bottom line is this. Listen, Tesla's got the Model 3. Tesla's got the Model Y. I've done videos on that Tesla Model 3. I've done videos on that Tesla Model Y. I could consider buying back into Tesla because I know they have big things coming. I know they got the Cybertruck coming. I know the Model Y production hasn't hit its crescendo because the Model 3 and the Model Y, they're about to be produced in real big numbers because they're moving production to Texas. That means more jobs in Texas. That means more Teslas for everybody. So the bottom line is this. If you get in, if you buy it right now, you can avoid what happened with Apple, where when they announced the split, it was at $3.99 a share, and then it suddenly rose up to $4.40, and you can save yourself a couple of bucks. If you buy Tesla immediately, you might be getting it lower than it will be by August 31st. But the bottom line is you have to make the conscious decision that you're going to buy into the split because these splits are important times.